दिनशॉ ईरानी, गुड मॉर्निंग। भाई आज तो स्माइल नहीं देख सकते, फोन पे ज्वाइन कर रहे हो।
But his mug is all smiles.
You can still hear me. You can still hear me laughing.
मजा नहीं आ रहा, आवाज कड़क होनी चाहिए जब मार्केट ऑल टाइम हाई पर है। योर लाफ योर द लाफ्टर शुड रीच अस फ्रॉम बीकेसी टू वर्ली, इट शुड बी दैट लाउड। और जोर से।
That's high decibels, but
So how about a roar to celebrate a new all time high, Dinshaw Irani?
yes, definitely. And I think actually, Nico, this is just one milestone. I don't see the market stopping. I mean, over a period of time, obviously. And as you rightly put it, just before I joined, I could hear you. The SIPs and plus, you look at the other flows which are regular in the market on a monthly basis. You're talking about $2.5 billion kind of flows on a monthly basis. I mean, if I include obviously the EPFOs, the NPS, and the unit-linked insurance schemes, the equity portion, they're $2.5 billion. You can't deny that. There's no way you can see those kind of supplies coming into the market to satiate those kind of numbers as such. Obviously, the IPOs will take away some, but I think bulk of the money has to come into the markets as such. And I that's why I believe that given the fundamentals of our stock market, in fact, even the last quarter, reported quarter, September numbers, one saw the market's numbers getting upgraded as such. I mean, the growth rates were also phenomenal, though the top line didn't kick in as much. But the fact is that, I mean, we are in a very good spot today.
Yeah, absolutely. Dinshaw, stay with us. Let's share the smiles. And we've got Punita Kumar Sinha as well joining in on the show. Punita, hi, morning. We've made it to that all-time high on the markets. And, like our guest speaker was also just reiterating that this is just a, mathematical number. There are hopefully many more legs to this rally. And it seems like the blocks are headed that way. I mean, be it the GDP print or the exit poll outcome, or for that matter, that FIIs are slowly coming back to India equity markets. It seems all hinting towards further up move.
Well, I mean, I think, yes, for the near future, the flows are just unabated and very, very strong. And I think that's really what is differentiating the Indian market from the other markets, is that our domestic investors and the SIPs into the small and mid-cap funds have really been what has supported this market in otherwise not a very conducive global macro environment. So I think while the geopolitical situation still remains a risky factor, the US, looks like it's kind of, that the inflation is still kind of coming down. And so that at some point next year, rates may come down. But at the moment, there is still, one is seeing some recession. And I think when I look across the globe, India is a shining spot. And what is really driving the Indian markets are the domestic investors.
Neither they say that markets, you never get great bargains when you are investing when there is cheery consensus. And India seems to be this cheery consensus. When there is cheery consensus, what is the case for investors to make money? I mean, how much of the good news or the proverbial good news is in the price?
I mean, I think a lot of the good news is in the price, especially in the small and mid caps sector, where I think there is a little bit of irrational exuberance. And the irrationality is not so much on the growth. The growth in India is definitely very strong compared to what we're seeing in the rest of the world. But there is, nobody's paying any attention to valuations. And that's what is scary. Nobody's even looking at the multiples. They're just looking at the growth and even the mutual funds. They're getting so much money that they have to deploy it. And if you look at the kinds of companies where the stocks are going up even more, are ones that are not even covered by many research houses. So the stocks that are the smaller ones, not in any coverage by the sell side, are still seeing a lot of rally. And so clearly there is some irrationality. These companies are not even well researched, and the stocks are just continuously going up. So there is a little bit of that concern that I have in the small and mid cap space. But if you look at large cap companies, there is, value to be found there because they've really lagged and they've performed, in line with just revenue growth and not even earnings growth for the most part.
A lot of points really to feed into over there, Punita. A lot of food for thought. And Dinshaw, would you share Punita's view that, mid and small caps, at least in pockets, are showing exuberance and they've run up ahead of their valuations, whereas large caps, and there's a long list of them, the blue chips of the mightiest blue chips, which have actually lagged, it's time for them to actually perform now.
So, Aisha, actually, if you see the index, the way it has performed, mid cap and small cap, it's up 36, 37 odd % year to date, which obviously is, and look at the gap. I mean, if you look at the Nifty, the larger cap index, I think it's up around 12 odd % or so from year to date I'm talking about. So obviously that gap is too huge. Normally when you see these kind of gaps, and actually the valuations also have gone out of whack. I mean, if you see the difference between the two valuations, I think from a regular basis, if you look at the 10-year averages, we are some 1.5 standard deviation away on that matter. So obviously there's some stretch happening on the stocks within the index. Unfortunately, in the mid-cap space, there's only 150 stocks to play with, right? And fortunately, in the small cap space, anything beyond 250 is small cap. So you still get some pockets of value within the small caps. But in the mid caps, yeah, I agree. Somehow, I mean, I think some valuations are stretched. And anyway, we're looking at a Santa Claus rally going ahead. So you'll see large caps really participating in this one. That's what our feel also is out here.
So, Dinshaw, I have a simple question. We may get excited about India. We may feel, okay, we are perhaps right at the top of the pedestal. But if I look at the Nifty, Nifty is not the best performing index this year. I mean, Nasdaq has done much better than Nifty. S&P has done much better than Nifty. So can I say that don't get excited, look at the global markets. They've done rather well and we only piggy bank on them.
Very true. I agree, Nikunj. I totally agree with you. That's why I'm saying that the large cap index hasn't gone anywhere actually. And in fact, on valuation terms also, we are in line with our, say, probably 7-8 year averages as such. So that's why I believe that large cap has to kick in right now. And that's why if you see our portfolio also, it's more of large cap heavy today than more weighted on mid cap and small cap. So yeah, to an extent, yes.
Punita, I know you were alluding to the fact that, yes, this is coming at a time when the global backdrop isn't looking all that robust or rosy. So do you reckon that if we were to see a turn of tide, that would largely emanate from global concerns, particularly recessionary concerns from the US?
I actually think perhaps not, because I think there is already kind of a recession in the US that is largely gone unnoticed, but it is there. And in fact, perhaps sometime next year, not anytime soon, there may be rate cuts, interest rate cuts. If you see, the mortgage rates have already started to come down in the US. So I think that could be a trigger for US markets, the broader markets in the US to perform. Now, in complete contrast to India, whereas in India, we've seen the mid and small caps, and the breadth is very, very good in terms of performance of stocks. In the US, it's been a very narrow rally. And if you look, like today, the Russell 2000 began to outperform. And so there is a potential for the broader market in the US to start to perform. And in India, it's been the complete opposite, where the broader market has really outperformed and the narrower sort of Nifty hasn't. Whereas in the US, as you said, the NASDAQ, it's really been driven by a couple of very strong rallies in, some of the larger cap, particularly some of, the tech names. So it's a completely opposite situation that we're seeing in the world. But when you look at the growth, interesting, like today I met a cement company in Asia, and they were saying, oh, our growth at best is flat volume growth. And when you look at Indian companies, you never hear that, right? There is so much growth. Growth is not an issue. So India is unique in the sense that there is a lot of growth, which you're not seeing in the rest of the world. And that's what's driven up the valuations. But I think that US markets could do better than what we've seen them do from a broader market perspective next year.
We appreciate your time. Thank you for joining us. Well,